Thank you, everyone, for showing up. I know the crowd is not very big today. We probably have a group of people stuck with something, so they probably can't make it today. But anyway, we'll start with my topic. I'll try to make it as short as possible so that we can keep talking and have some networking event going on. Today's topic I'm going to present is 2018 to 2019 budget from a tax professional's perspective. So what I want to achieve today is use the most simple way to deliver some point that you can take away with you today, available for using, immediately benefit for your situation. So, okay. For this new budget, every year, the Australian government releases new budget in the month of May. This year, they raise the marginal tax rate threshold for individual tax return for individuals for 32.5% tax bracket. So start after 2 weeks' time. So from the 1st of July 2018, raising the marginal tax threshold for the 32.5% tax bracket to $90,000. Within this financial year 2018, it was 87. An example is Jack earns 90 grand in 2018 financial year, and 2019 earns the same, yet the tax result will be different. So he will be paying $135 less tax in next year than this year. There's another new tax offset coming in place. It's called low and middle income tax offset for 4 years only, start with 2019 financial year. Same example for Jack, he will receive 530 tax offset in next year, which gives him overall, plus the first one, a better situation for almost $700. It is something. So if your taxable income is within that kind of figures around, it will be beneficial to enjoy these changes. If you can manipulate your income, that's probably what you want to look at. It used to be if you can only receive some distribution from your business around maybe 80-ish thousand, now you can top up to 90 grand. So that is something you can take away and think about. New personal tax rate and threshold. It will change in the next 6 years. This is what government want to eliminate for 37% as in the personal tax rate. So eventually we don't have so complex, so many layers of tax bracket. We only have 0%, 19, 32.5, and then the top 45. So we don't have 37 and anything else. Also, the threshold will increase too, from 180 to 200. And then we move this population in the 37 down with the lower tax bracket. So this is what we're looking forward in the next few years, provided next year's budget doesn't change much. Okay. There's a 10 years enterprise tax plan. Enterprise tax plan means that something to do with business. So it can be incorporated, can be not incorporated, but there is a link. If you just search this word in ATO's website, you will see the detailed. I think it's probably that one. Yes. That's a detailed plan. So we know that ATO trying to reduce the company's tax rate. Back in the old days, we still have 30%. And then 2016 start to reduce. Last year we had 27.5 for the eligible business whose turnover is less than 10 mil, and then keep onwards, and we have increased the tax threshold. So more and more companies will be eligible for lower tax bracket. Yet on the right-hand side, that's big company with bigger gross revenue, they still have to pay 30%. And also the international investors, if they have foreign companies subject to company tax, they don't really have the discount. Looking forward down the track for several years, you can see the more and more eligible company will be in the picture, being eligible for lower tax rate, and then up to this line, 2014 financial year, there won't be any tax threshold to change two groups of the taxpayers for companies. So they will have the same tax rate for all the companies. So that's basically what it is about. Of course, it's reducing some administration burden. You probably have already experienced the simplified BAS lodgement, etc. So that's basically what it is. The point to take home is that if you just around the threshold for different tax rate, you want to push the taxable income to next year as much as possible because you will be eligible. So I do have several clients do things like that, especially when they have one lump sum big taxable income available that they probably can manipulate the date of the invoice or the cash position so they can immediately enjoy 1.5 tax discount. So that is something to think about. Okay. Right. Extending the 20 grand instant asset write-off. This is what we all know last year already, but they extend to next year too. So no rush. You still have around 12 and a half months to buy any asset that's eligible for instant write-off. And also we have the increased unincorporated small business tax discount rate for 5% to 8% and will increase to 16% by 2027. And then the next of several part is about where the budget's money going to be focused on. So transport, medical, and export in agriculture. It is where you probably want to focus where your investment will be heading to or your clients' focus. So these four or three sectors of the industry that the government will give more incentive and support. Preparing financially for a longer and more secure life. There are a lot of new measurements coming in place, including maybe the work bonus, also the age pension, and the eligibility for self-employers. Also together with superannuation, work test exemption used to be if you are falling in some categories, you have to pass the work test to be able to make contribution to your super. Otherwise, you can't. But it was scrapped for eligible group. So for next year, the year after, from the 1st of July 2019, age 65 to 74, whose super below 300,000, they will not need to pass work test to be able to do contribution. Preparing financially for a longer and more secure life continue. Next is there's funding about pension. It's increasing the pension income and including maximize the rate age pensioners who own their own home. So there are a lot of support with the old-aged people. If you have parents just about to have retired or they are having they are receiving the government pension, you probably want to look into it. Just a little bit adjustment, probably they will be able to receive more benefit from the government budget change. You need to talk to the financial planners about this for any changes and plan, because the benefit is really substantial. I want to bring to business owners' attention for two things on the top of what I've just mentioned. So that 2 point was mentioned in the last budget from 2019 July onwards. Cash business, we are aware of where the world is heading to. Many countries have been dealing with the cash business for quite a while, for many years. So they have very harsh measurement. And now Australia just introduced this one, the first one. Other than monitoring and auditing, they put in place that after the next 13 months, business can no longer receive cash payment above 10 grand for a sale. So be careful of that. You do have time for another 12 months, but after that, really be careful. And then another one is remuneration provided for the commercial exploitation of a person's fame or image will be included in the assessable income of that individual. So say, for example, you have a trademark registered under your individual name. You also have a company running some kind of business that using this image or trademark. Then, because of this change, you will need to include that part as a market value for your assessable income. This integrity measure will ensure that high-profile individuals are no longer be able to take advantage of lower tax rate by licensing their fame or image to another entity. So something to pay attention to and be aware of. This is what I want to spend a little bit more time about. Superannuation carry forward concessional contributions. It's applied to everyone who can make superannuation concessional contributions. I think most of us are eligible for doing this. You'll be able to carry forward and use the superannuation contribution concessional cap space amount from July 2018 onwards. The first year you can use it is 2020. But only if you have a total superannuation balance of less than 500,000 at the end of financial year in the previous year. I don't know how clear this can be understood by us, but I will give everybody an example straight away from tax office. So Sam has a minimum super contribution as he's working part-time while studying. His super balance is continued to grow with earning and a small amount of super contributions, but 2021, his account balance reduced due to negative returns in that year. So he has unused the cap for each of the 19 to 22 financial years. That's the table, right? You can get this table from ATO. That's on the ATO's official page. So every year he has 25 grand eligible super cap, and then he can carry forward if he hasn't contributed enough, like 3,000. So he still has 22. So that 22 can be carried forward. 3,000, another 22 still can be carried forward. Give you a real example in life. I have a client, this old couple running a business entire their life, running a restaurant, working really hard. They accumulated wealth and invested in rental properties. At the age of now, they are thinking of retiring around almost 60, so about 59, 57. They are giving away their rental properties to their children. At first, they thought, oh, we just give our house to children. And then I told them there's capital gain tax event happening. Those properties are nice. They invested long time ago. So it means that the capital growth is a lot, which means that they are facing a high tax to pay in that year when the transfer happening. They are not aware of it. At first, okay, you have two options. You don't have to give to your children. You can just sell it, sell to the market. They can get the money back. They can pay off the loan existing. They can pay the tax, and then they can give the money to their children. However, you can't do much about it. The price you can do, the tax rate will be straightforward to calculate it, and children need to look for their own home. So they decide the children still take the property without selling to the market. Okay, by all the means that I could think of, which including, of course, we did a appraisal from a real estate agent, and also we try to put down the properties on the land so the proceeds can be lower. Also want to contribute to their super, all right? By this measurement means that if this year they don't do the transfer, 2018 they don't do the transfer, they can carry forward, both of the parents, they can carry forward 50 grand in total, 25 plus 25, 50 grand to next year. So next year, they can both contribute 50, 50, altogether 100 after the after the capital gain event happened. So they all of a sudden, in 1 year, they have 200,000 they can deduct before the discount of the capital gain. If they wait another year, they have another 50 reserved. So what happened is, okay, this year the daughter has to get a property, yes, but to their son, we will wait until probably 5 years later. I'll closely monitor what's going on with their super funds balance, because one of the eligibility is under 500,000. So as long as their super fund is under that, we can still wait until it's almost 500. We will start to transfer the property. By that way, you can calculate probably by rough calculation, 15% is in the super. Top up individual tax is 45%. Difference is 30%. So 30%, how much? 30% on, say, for example, 200,000. How much is that tax we just saved for the client? 60 grand. Yes? No, it's irrelevant. It's in the same year, same financial year. So that will be reflecting on their individual tax return. You have a capital gain event, you have a capital gain, even after discount is a lot. So capital gain in the item of the income, and also the deduction of the superannuation will be under the individual deduction item. So that will give them a pretty good position, rather than without any planning, just do the transfer next year, then they miss out a lot of benefit.
So if a sole trader, business owner,
yes,
can pay the carry forward?
Yes.
For 2
Yes.
years, yeah?
5 years.
5 years.
Yes.
Wow.
Ring your bell, hey? You probably will.
500. He's over.
He's over.
No, his balance is
Oh, okay. All right.
Thank you.
That's all right. Good point, but still good point.
Yes.
So, yeah, very practical, very practical. There's something for the superannuation professionals to be aware of. There's a transfer balance cap applies from already this year. There's a limit on the total amount of superannuation that can be transferred into retire phase. Retire phase is tax-free. So there's a limit now. The transfer balance cap will start at 1.6 million. It will be indexed. If at the time the amount indexation you'll be entitled to will be calculated proportionally based on the amount of your available cap space. If at that time you meet or exceed the cap, you will not be entitled to indexation. You can continue to make multiple transfers into the retirement phase as long as you remain below the cap. So for the tax professionals, especially specialized in superannuation, they need to be careful about this cap. For who has a self-managed superannuation fund and who's at the phase of retirement, you need to talk to your accountant professionals to be aware of it. Is the rule to change from the previous years? Another thing probably you can think about now is that this year, 2018 tax year, which we have 2 weeks left, you can make superannuation contribution as tax deduction no matter you work for someone else full-time or you work for your own or you have investment situation. Used to be we have work test, but now that was abolished. So not many taxpayers is aware of it. Everybody is eligible now. You don't have to pass any percentage test. Is that something clear, or I need to explain a bit more? So this way, this change, it can be combined to use with the previous one, carry forward concessional superannuation cap. We can use them together and think about that. First home buyer superannuation contribution. People have been talking about it. I think I need to make a clarification about it. So for whoever's young people, old people, doesn't matter if it is your first home, you can make contribution to your super. And then you can take it out to buy your first home. Why is that attractive? It's because when you make the contribution, it is a tax deduction. So that is the government incentive or the support for the first home buyer. If you do want to buy your home from your super, just be aware that it's not the money that your employer has made for you. It's the money you paid on the top of the employer's contribution. There's a funny situation I was experiencing just in the last week is that someone worked for uni. They have 17% super, but funny thing is only 9.5 is compulsory. The other balance is actually non-concessional. I didn't know about anything like that because it's my client's spouse situation. So for that, I don't know how the management or the administration of the uni can do, but it doesn't serve any benefit. It doesn't give you a tax deduction. It's still from an employer, so you can't even use it if you want to buy your first home and withdraw. So if you can negotiate a term, maybe just not take it as a super, non-concessional, maybe you can get the money out, but still put in a super under your own name, that will be fine. It's just a very simple trick to talk to your payroll people in a uni or government if you're subject to this kind of arrangement. Very worthwhile to look into it, because you miss out not only the tax deduction, but also the eligibility to withdraw the money if you're still yet to buy your first home. All the references official in the budget.gov.au website. And also ATO's website. So yeah, so that's pretty much my presentation. I hope I keep it in a good time and still make a clear point and explanation. Has anybody any question? Yeah.
You said the tax of discount from 6% to 9%, small business, up to 1,000, still up to 1,000, or because the rate you said
Up to a cap of 1,000. Yes, yes. It is it's a uniform. I think it's a uniform of tax offset. It's a small, if say unincorporated, including partnership, trust, and sole trader. When you have that box to tick, okay, I'm a small business. I receive this as a small business, taking under my personal tax income. You tick that whatever, eligibility, wherever it is different place to tick. And then you'll have a tax offset. But that tax offset is only up to 1,000. Any other question? No? Okay. All right, thank you very much. Yes, you do. Yeah.
Yeah, in 2019 cash.
Yeah.
In
19.
about
10 grand.
10 grand, yes. So
10 grand one trade means that if you have, my understanding is, if you have an invoice, one invoice 10 grand, you can't take cash receive. But if you have two invoices, 5 and 5, that's fine.
so it's also for real estate.
Real estate, I think it is subject to this. You can't sell a house with total cash, no trades on the bank anymore. I believe it happens all the time, right?
The business sale, sometimes they pay cash.
Yes, I totally believe $1 million cash, yeah. Always happen. I'm not surprised, yeah. Any other question? No question? Cool. So I'll stop right here and...